But let's shift focus. Let's talk about what's happening with SIS India, and welcome on board Rituraj Sinha, the Group MD. Rituraj, hi, good morning. Good to have you on the show. Your India security revenues in September were up 94% as that of the March revenue levels, while international operations were at about 21%. What is the outlook on the domestic as well as the international business going forward?
Hi, good morning. Well, let me just help you with the numbers a little bit. What we had announced is that our India security revenues were at 94% of March. So it was roughly 6% down effectively in September, monthly revenue run rate. And the international piece was up 21% compared to March. That's what we had announced. But in summary, SIS monthly revenues in September month were higher than March. So we basically, as an essential services market leader, which does security services and cash and facility management services, in this whole pandemic, we were least impacted, and we made a very quick, sharp recovery, which happened in September. And the whole festive season, this Q3 period, we've only built on that. So we are shifting back to growth mode from recovery mode now.
Okay. What's the update on the facility management segment and the operating levels that you're currently holding at, with railways being non-operational, but now hotels and retail are beginning to open up?
Well, our facility management business got impacted initially, in the lockdown period and afterwards because, very unprecedented things like, Indian Railways shutting down, hotels and IT spaces were largely shut down, malls were shut down. But I think a lot of that has changed in the festive season in the October to December period. Even as railways is still not back up, the metro rail across cities is back online. Retail spaces have opened up in this festive season. Hotels are pushing to get back into business in this festive season. So generally, we have seen a significant volume uptick with existing customers in the third quarter, and you should see significantly better performance from the facility management segment in Q3. Having said that, from a full year perspective and a SIS group perspective, let's be clear that the facility management business is only 10 to 12% of our overall revenue pie. So even if that lags a bit on recovery and growth, it doesn't change the overall picture by much.
Sure. Rituraj, are you sticking with estimates of growth for the India business as well, that you've already said expected to be back to the pre-COVID levels of 20% CAGR in FY22?
Well, we are not looking as far as FY22 at this point in time. What I could tell you is that basis what it's looking like towards the end of 9 months, SIS could very well be on par to report single-digit growth for FY21 itself. There is a very interesting correlation between economic cycles and essential services businesses like ours. In good times when the economy is growing at 5, 7, 8%, and everybody's building hotels, hospitals, and factories, you need more security, you need more CCTV cameras, you need more janitorial and facility management staff. But even in crisis like the one we've seen in the last 8, 9 months, the demand for essential services has not contracted despite GDP contraction. So that's a pretty interesting correlation that has been demonstrated for essential services vis-a-vis economic activity and GDP.
Rituraj, I also wanted to understand what the outlook is then in terms of the new contracts that the company has got from April to November, and what are the organic and inorganic growth opportunities?
Well, I think the new order flow has started to pick up August onwards. Still tepid, not at pre-COVID levels. And we are also being a little careful as to the customer segments that we intend to avoid, because the long-term impact of COVID crisis is yet to be fully understood. But yes, orders are back, number one. Number two, and more importantly, I think the entire labor-intensive services sector, like us, is heading for two fundamental developments and big changes, in the post-COVID era. Number one, COVID itself has shifted customer buying behavior from the cheapest vendor to the more reliable vendor. Clearly the price competition is lower, the reliability and the expertise of the service provider is a far bigger decision-making point for a large part of our customers. They don't want to take chances with employee health and safety at the workplace when it comes to hygiene services, or they don't want their security staff to go missing in a lockdown type situation. So I think that's a big shift in customer buying behavior. And the bigger shift for labor intensive sectors is labor reforms itself. I think the 4 labor codes have been legislated and the model rules are expected early January. And we could be looking at effective date of labor codes implementation sometime in April, maybe June. That's what the sense one gets. And that is the most fundamental change for large employees like us and labor intensive sectors. So I guess 2021 augurs very well for consolidation, both organic consolidation and M&A should that come up. At this point in time, we have no M&A in the immediate outlook, but it is good times for organic consolidation, definitely.
Right, Rituraj. Thanks so much for sharing with us the outlook on the business and how things are shaping up at SIS. Quick look at the stock at 425 in trade. Time for a short break right here on the show. Do stay with us. Lots more interactions lined up when we come back.